We as Mutares typically buy corporate carve-outs. We do buy loss-making companies, and we start to create value with our own people. So what we basically do is we buy risk, we understand the risk, we send in our own people, we get money from the seller, and we turn around the company. So this is always step one. So that's the platform investment. And on this platform investment, we use our M&A competences to increase inorganic sales by adding companies. So we look for add-on acquisitions in terms of technology, we look for add-on acquisition in terms of geographical footprint, and we look on just add-on acquisition through increased market share. So we are not the future organic growth investor. We are the operational guys who make a company survive and then grow unorganically through add-on acquisitions. And one of the examples is the Dongus Group. That's a recent example. So we bought the company in 2017, 40 million in sales. We did 5 add-on acquisitions, and as of next year, the company will have 365 million in sales within 2 years. So we grew the company from 40 9 times in 2 years through add-on acquisitions. We love the downturn, actually. Downturn in the economy always means for us a great opportunity on the buy side. So we see files, especially on the automotive side, but also on the industry equipment side, which you would not have seen a couple of months back or a year back from today. This is because downturn, large corporates try to focus on their core competences, etc., etc. So a downturn in the industry is fantastic for us on the buy side. We do understand automotive very well. That's our largest sector. So we can calculate the risk of an automotive purchase of today, I think, better than any other turnaround in the market. The recent acquisition, or the last acquisition we did, was a logistic provider, Q Logistic. We bought from the Austrian state. Large divestment on the Austrian side, their first privatization ever. This company fits into our goods and service sector. And logistically, we do understand what they do. So one of my colleagues in the board who follows the operations is a former CEO of DAXE, which is a large German-Swiss logistic company. And so we bought the company, carve out, not from a corporate, but at that time the state, right? And we tried to turn around this business with our people, with our expertise, with our operational guys. So exactly the Mutares approach, the Mutares case. This was the last acquisition. The acquisition before was the last add-on acquisition on this Dongus Group story, which I told you before. So pure add-on. In the Nordics, called the Ruki Building Systems. What we add with this add-on acquisition was we bought market share in Sweden and Finland. We bought the market entry in Poland and Norway, and we bought the product on the facade side. So exactly the buy and build strategy was Ruki Building Systems, and the most recent one was Q Logistic, a platform investment, more than 200 million in sales, roughly 1,000 people. Carve out from the Austrian state. All the portfolio companies are in different life cycles. So we have companies who are already restructured, who generate profits and generate at the end dividends to the holding structure. And then the ones we recently bought are, of course, heavily loss-making. So we have entities recently bought. They generate 1 million loss per month. But we have other entities already turned around, generate X amount of millions in profit amounts. So in general, you can say everything which is bought within the last 12 to 18 months is still is in restructuring period. Everything which is more than 18 months is in the stabilization profit period. Well, the management of Mutares, management and supervisory board, we hold more than 40% of the shares. We have already committed for 2019 a €1 dividend as a base dividend, which will be paid out in May next year. And so the expectation is clear. We have the €1 as a base dividend. We had the €1 the last 2 years as well, which is a yield of roughly 10%.